Based on the provided data, the price of Bitcoin appears to be in a downtrend. The historical price data shows a general downward movement, with the price fluctuating around the support level of $78,600. The forecast data also suggests a continuation of this downtrend, with prices expected to remain below $85,000. Therefore, a suitable strategy would be to short Bitcoin at the entry price of $83,600. The stop-loss price should be set at $84,000 to limit potential losses. The target price could be set at $78,600, aiming to capture a potential 5% gain. This strategy is supported by the RSI, which is hovering around the neutral level, indicating potential for further decline. Additionally, the price is currently trading below the middle Bollinger Band, suggesting a bearish momentum. Based on the provided historical and forecast data for Bitcoin Cash, a potential bullish strategy can be implemented. The historical data shows a general upward trend with support around $331. The forecast data suggests continued price increases, reaching $350 by the end of the week. Therefore, a long position can be considered with an entry price around $335. The stop-loss order should be placed at $330 to limit potential losses, while the target price can be set at $355 for potential profits. Additionally, the RSI indicator suggests potential overbought conditions around 80 and oversold conditions around 20. The Bollinger Bands indicate potential price breakouts when the price touches the upper or lower bands. Combining these technical indicators with the overall trend analysis, a more refined entry and exit strategy can be developed. For example, waiting for a pullback to the support level of $331 with a bullish RSI divergence could signal a strong buying opportunity. Conversely, if the price breaks above the resistance level of $342 with strong volume, it could indicate a continuation of the upward trend. Based on the provided data, STRK appears to be in a downtrend. The price has been consistently decreasing over the past 2 weeks, and the forecast predicts further decline in the coming week. The RSI is mostly below 50, indicating bearish sentiment. Support levels are holding around 0.582, which could offer a potential buying opportunity. A position strategy could be initiated with an entry price at 0.582, a stop-loss at 0.562, below the recent support level, and a target price at 0.641, a significant resistance level. While the Bollinger Bands suggest potential for volatility, the price consistently trading below the middle band reinforces the downtrend. The RSI strategy could also be employed, looking for oversold conditions below 20. However, given the current trend, it's advisable to prioritize the support-based strategy for a more conservative approach. Based on the provided data, Ethereum appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price falling below the support level of $1,860 on several occasions. The forecast data also indicates a continued downward trend for the next week. Therefore, a short position strategy is recommended. A suitable entry price for a short position would be around $1,910, near the current price level. The stop-loss order should be placed above the recent resistance level at $1,940, limiting potential losses. The target price for this trade could be set at $1,750, based on the forecast data and the overall downtrend. This strategy utilizes the bearish trend, the RSI oversold level, and the Bollinger Bands to predict a further price decline. Based on the provided data, XRP appears to be in a sideways trend with a slight upward bias. The historical data shows price fluctuations within a relatively tight range, with support at 2.33 and resistance at 2.38. The forecast data suggests continued consolidation, with prices expected to hover around the 2.30 to 2.40 range. Therefore, a conservative strategy would be to wait for a breakout above the resistance level of 2.38. Enter a long position at the breakout price with a stop-loss order placed at 2.33, the support level. The initial target price could be set at 2.45, with the potential for further upside if the breakout gains momentum. This strategy utilizes the RSI and Bollinger Bands to identify potential entry and exit points. It also incorporates the support and resistance levels to manage risk and define profit targets. Based on the provided data, Binance Coin appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price falling below the support level of $587 on several occasions. The forecast data also suggests a continuation of this downtrend in the coming week. Considering these factors, a short position could be considered. A suitable entry price would be around $584, with a stop-loss order placed at $598 to limit potential losses. The target price could be set at $532, which is a significant support level identified in the historical data. To further refine the strategy, we can incorporate the RSI and Bollinger Bands indicators. The RSI is currently below 40, indicating oversold conditions, which supports the short position. Additionally, the price is trading below the middle band of the Bollinger Bands, suggesting a potential continuation of the downtrend. The stop-loss price of $598 aligns with the resistance level and the upper band of the Bollinger Bands, providing a risk management strategy. The target price of $532 is based on historical support and the potential for further price decline. Based on the provided data, the stellar price shows a downtrend over the past 2 weeks, with the forecast suggesting continued downward movement in the coming week. The support level at 0.276 provides a potential buying opportunity, while the resistance level at 0.312 suggests a ceiling for upward movement. A potential strategy could involve entering a long position at the support level of 0.276, with a stop-loss order placed below the recent lows around 0.242. The target price could be set at the resistance level of 0.312, aiming for a potential profit of approximately 13%. This strategy combines the support level entry with a risk-reward ratio that favors potential gains. Based on the provided data, Toncoin appears to be in a downtrend. The historical price data shows a consistent decline, with the price closing below the previous day's close on several occasions. The forecast data also indicates a continuation of this downtrend. Therefore, a bearish strategy is recommended. A good entry point would be at the current price of 2.92, with a stop-loss order placed at 3.00 to limit potential losses. The target price could be set at 2.53, the identified support level. The RSI indicator suggests that Toncoin is currently oversold, with a reading of 39.7. However, the downtrend and forecast data suggest that further downside is likely. The Bollinger Bands are also indicating a potential downward move, as the price is currently trading below the middle band and the bands are narrowing. Combining these factors, a short position with an entry price of 2.92, a stop-loss of 3.00, and a target price of 2.53 is recommended. This strategy aims to capitalize on the continued downtrend while managing risk through a defined stop-loss order. Based on the provided data, Cardano appears to be in a sideways trend with a slight bearish bias. The historical price action shows a range-bound movement between the support level of 0.673 and the resistance level of 0.803. The forecast prices also suggest a continuation of this trend, with a slight upward movement expected. A suitable strategy would be to wait for a price pullback towards the support level of 0.673. Once the price reaches this level, a long position can be entered with a stop-loss order placed at 0.660. The target price for this trade could be set at 0.775, which is a previous resistance level and aligns with the upward forecast. This strategy utilizes the support level as a buying opportunity and aims to capitalize on the potential upward movement predicted in the forecast. Based on the provided data, Litecoin appears to be in a downtrend. The historical prices show a consistent decline, and the forecast prices suggest this trend will continue. The RSI indicates oversold conditions, suggesting a potential bounce. However, the price is also approaching the support level of $87.7, which could provide a buying opportunity. A long position could be initiated at $87.7 with a stop-loss at $85.7 and a target price of $95.2. The Bollinger Band strategy suggests a potential buy signal as the price is nearing the lower band. Combining this with the oversold RSI and the support level, a long position at $87.7 with a stop loss at $85.7 and a target price of $95.2 appears to be the most efficient strategy. This strategy capitalizes on the potential for a bounce while managing risk by placing a stop loss below the recent lows. Based on the provided data, Doge-Coin appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend may continue. The support price of $2.1 has held strong, acting as a floor for the price. Therefore, a bearish strategy is recommended. A suitable entry point for a short position would be at $2.28, the projected price for March 15th. The stop loss should be set at $2.32, slightly above the entry price, to limit potential losses. The target price could be set at $2.1, aligning with the strong support level. This strategy utilizes the bearish trend, support level, and the predicted price movement. Based on the provided data, Aptos appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price falling below the support level of $5.16 on several occasions. The forecast data also suggests a continuation of this downtrend in the coming week. Therefore, a bearish strategy is recommended. A short position could be entered at the current market price, with a stop-loss order placed at $5.37, the highest forecast price for the next week. The target price could be set at $4.93, which is the lowest forecast price for the next week. This strategy utilizes both the historical price trend and the forecast data to identify a potential short selling opportunity. Based on the provided data, SE appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue. The RSI indicator is below 50, further supporting the bearish outlook. We will implement a short position strategy. A good entry price would be around 0.195, which is near the forecast low for the week and below the recent support level of 0.182. The stop-loss order should be placed at 0.204, slightly above the entry price to limit potential losses. The target price is set at 0.175, which represents a significant downside move based on historical price action and the current bearish trend. This strategy utilizes the downtrend and oversold RSI as signals for a short position. Based on the provided data, Ethereum Classic appears to be in a sideways trend with a slight bearish bias. The price action has been fluctuating within a defined range, with support around $16.9 and resistance near $18.6. The RSI indicator shows mixed signals, hovering around the neutral level of 50, suggesting indecision in the market. The Bollinger Bands are relatively tight, indicating low volatility. Considering these factors, a conservative strategy could be to wait for a clear break above the resistance level of $18.6 to enter a long position. A suitable entry price would be around $18.7. The stop-loss order should be placed below the recent swing low, around $16.9, to limit potential losses. The target price could be set at $20, representing a potential profit of 6.5%. Alternatively, if the price breaks below the support level of $16.9, a short position could be considered with an entry price around $16.8, a stop-loss order above the recent swing high, and a target price based on the next support level. Based on the provided data, Polygon appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, and the forecast data suggests this trend will continue. The support price of $0.205 provides a potential buying opportunity, while the resistance price of $0.221 presents a challenge for upward movement. A suitable strategy could involve entering a long position at the support price of $0.205. A stop-loss order should be placed at $0.195 to limit potential losses. The target price could be set at $0.221, aiming to capitalize on a potential bounce off the resistance level. This strategy incorporates the support and resistance levels, aiming to buy at a potentially undervalued price and sell at a potentially overvalued price. Based on the provided data, AEVO appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with the support price hovering around $0.108. The forecast for the next week also indicates a continued downward movement. RSI suggests the asset is oversold, but the trend is still bearish. Considering these factors, a short position could be considered. A potential entry price for a short position would be around $0.115, the first forecast price. The stop-loss order should be placed at $0.126, the resistance price, to limit potential losses. The target price could be set at $0.108, the support price. This strategy utilizes both the trend analysis and RSI indicator to identify a potential short opportunity. Based on the provided data, optimism appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, with support holding around 0.805. The forecast data suggests this downtrend may continue, with prices predicted to fall further in the coming week. Therefore, a bearish strategy is recommended. A good entry point would be around 0.847, the first day's forecast price. A stop-loss order should be placed at 0.877, the recent resistance level, to limit potential losses. The target price could be set at 0.788, the lowest forecast price for the week. This strategy leverages the RSI and Bollinger Bands indicators. The RSI has been consistently below 50, indicating bearish sentiment, and is approaching oversold levels. Additionally, the price is currently trading near the lower Bollinger Band, suggesting a potential bounce may be limited. The combination of these technical signals further strengthens the case for a bearish position. The analysis of STRK reveals a downward trend over the past 2 weeks, with the price consistently declining and testing the support level of 0.146. The forecast data suggests a continuation of this downtrend, with prices expected to remain below 0.176 in the coming week. Based on this, a short position is recommended. Enter a short position at the current market price, which is 0.17. The stop-loss price should be set at 0.176, above the recent resistance level. This will limit potential losses if the price unexpectedly rebounds. The target price for this trade is 0.146, the identified support level. The RSI indicator currently stands at 40, suggesting that the asset is not oversold. However, the Bollinger Bands show that the price is moving closer to the lower band, indicating a potential for further downward movement. This reinforces the short position strategy. By combining these technical indicators and the historical price action, this strategy aims to capitalize on the ongoing downtrend in STRK. Based on the provided data, Solana appears to be in a downtrend. The historical price data shows a consistent decline, with the price dropping below the support level of $118 on multiple occasions. The forecast data also suggests a continuation of this downward trend. Therefore, a bearish strategy is recommended. A short position can be initiated at the entry price of $126, with a stop-loss order placed at $128 to limit potential losses. The target price is set at $118, the support level, aiming to capture a potential profit of $8. Based on the provided data, Jupiter appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, with the forecast indicating further downward movement. The support level at 0.482 provides a potential buying opportunity. A long position could be initiated at 0.482 with a stop-loss order placed at 0.476 to limit potential losses. The target price could be set at 0.552, which represents the recent resistance level. Additionally, the RSI indicator suggests that the asset is oversold, with readings consistently below 30. This further supports the long position strategy. The Bollinger Bands indicate a potential bounce as the price approaches the lower band. However, caution is advised as the overall trend remains bearish. The portfolio should prioritize the strategy based on the support level and RSI oversold condition, with a stop-loss order and target price as mentioned above. Based on the provided data, render appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend may continue. The RSI, while fluctuating, remains below 50, indicating bearish sentiment. The Bollinger Bands are contracting, suggesting a potential for a breakout in either direction, but the overall trend points downwards. Considering these factors, a potential strategy could involve a short position. Enter a short position at the market price around $3.08, the closing price on March 14th. Set a stop-loss order at $3.16, the highest forecast price, to limit potential losses. Target a profit at $2.74, the strong support level. This strategy leverages the identified downtrend and aims to capitalize on a potential price drop towards the support level. Based on the provided data, Solana name service appears to be in a downtrend. The historical price data shows a general downward movement, with the price closing lower on several consecutive days. The forecast data also suggests a continuation of this downtrend. The RSI indicator is hovering around the oversold level, indicating potential for a short-term bounce. However, the overall trend and the forecast suggest a bearish outlook. Therefore, a suitable strategy would be to enter a short position at the market price around 0.109, with a stop-loss order placed at 0.112, above the recent resistance level. The target price could be set at 0.102, which is the support level identified in the data. This strategy leverages the downtrend and the oversold RSI, aiming to capitalize on a potential further price decline. Based on the provided data, Doge-Coin appears to be in a downtrend. The historical price action shows a consistent decline, and the forecast data suggests this trend will continue. The RSI, while fluctuating, remains below 50, indicating bearish sentiment. The Bollinger Bands are contracting, suggesting a potential for a break in either direction. A potential strategy could involve a short position. Enter a short position at the market price around $0.165. Set a stop-loss order at $0.172, above the recent resistance level, to limit potential losses. The target price could be set at $0.155, the identified support level. This strategy capitalizes on the perceived downtrend and utilizes technical indicators to manage risk. Based on the provided data, PEPE appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data suggesting this trend will continue. The support price of $0.000000670 acts as a potential floor, but the resistance at $0.000000760 is unlikely to be broken in the near term. Therefore, a bearish strategy is recommended. Enter a short position at the market price, which is currently $0.000000670. Set a stop-loss order at $0.000000680 to limit potential losses. The target price is set at $0.000000620, based on the forecast data and the historical price action. Based on the provided historical and forecast data, SHIB appears to be in a short-term downtrend. The price has been consistently declining over the past 2 weeks, with the forecast indicating further downward movement. The support price at $0.0000127 provides a potential buying opportunity. A long position could be initiated at the support level with a stop-loss order placed below the recent swing low, around $0.0000115. The initial target price could be set at the resistance level of $0.0000134, representing a potential 7% gain. The RSI indicator suggests that SHIB is currently in an oversold condition, with a reading of 34.7. This could indicate a potential for a short-term rebound. However, the Bollinger Bands suggest that the price is likely to remain within the current range, with a potential for further downside movement. Therefore, a cautious approach is recommended, with a focus on risk management. The strategy outlined above balances the potential for profit with the need to protect against further losses. Based on the provided data, Doge-Coin appears to be in a downtrend. The historical price data shows a consistent decline over the 2 weeks, with the price falling below the support level of $0.43 on several occasions. The forecast data also suggests continued downward movement, with prices projected to remain below the recent highs. Therefore, a bearish strategy is recommended. A suitable entry point would be around $0.48, which is near the lower end of the forecast range and close to the support level. The stop-loss order should be placed at $0.43 to limit potential losses. The target price could be set at $0.40, representing a 16.67% decline from the entry price. This strategy utilizes the downward trend and support level to identify a potential entry point, while the stop-loss and target price aim to manage risk and maximize potential profits. Based on the provided data, Doge-Coin appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price closing lower on most days. The forecast data also suggests a continued downward movement in the coming week. The RSI indicates that the asset is not oversold, with values hovering around the neutral 50 level. The Bollinger Bands are constricting, suggesting a potential for a breakout in either direction, but the overall trend favors a downside move. Therefore, a bearish strategy is recommended. Enter a short position at the current market price, 0.00204, with a stop-loss order placed above the recent resistance level of 0.00217. This stop-loss will limit potential losses if the price unexpectedly reverses. The target price is set at the support level of 0.00196, where the price has found previous support. This strategy aims to capitalize on the ongoing downtrend while managing risk with a well-defined stop-loss order. Based on the provided data, Near Protocol appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests this trend will continue. The RSI is currently in neutral territory, but has been hovering near oversold levels, indicating potential for a short-term bounce. However, the Bollinger Bands show price action contracting, suggesting a potential breakout in either direction. Given this context, a cautious short position could be considered. Enter a short position at the market price near 2.61, with a stop-loss order placed at 2.66, slightly above the immediate resistance level. The target price for this trade would be 2.42, based on the forecast data and the support level around 2.29. This strategy utilizes the trend, forecast, and support/resistance levels. It's important to note that this is a high-risk trade and should be executed with appropriate risk management. Based on the provided data, Internet Computer appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price consistently trading below the resistance level of $5.95. The forecast data also indicates a continued downward trend for the coming week. Considering these factors, a short position strategy is recommended. Enter a short position at the market price near the current price of $5.66. Set a stop-loss order at $5.95, which is the resistance level and a potential reversal point. The target price for this trade could be $5.1, which is the support level and the lowest price point observed in the historical data. This strategy utilizes the downtrend and the support/resistance levels to define entry, stop-loss, and target prices. Based on the provided data, Injective appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price dropping below the support level of $8.81 on several occasions. The forecast data also suggests a continued decline in price for the next week. Considering these factors, a bearish strategy is recommended. A potential entry point for a short position could be around $9.73, the first forecast price for the upcoming week. The stop-loss order should be placed above the recent high of $10 to limit potential losses. The target price could be set at $8.81, the identified support level, aiming for a potential profit of approximately 9%. This strategy leverages the downtrend identified in the historical and forecast data, utilizing RSI and Bollinger Bands to refine the entry and exit points. Based on the historical data and forecast, BTC appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast suggests this trend will continue. A potential entry point could be around the support level of $225, which has held strong in the past. The stop loss should be placed below this support level, at approximately $220, to limit potential losses. The target price could be set at $235, based on the forecast and the recent price action. However, we should also consider the RSI and Bollinger Bands. The RSI is currently below 30, indicating oversold conditions, which could potentially lead to a short-term bounce. The price is also trading near the bottom of the Bollinger Bands, suggesting a potential for a rebound. Therefore, a more conservative strategy would be to wait for a confirmation signal from the RSI or Bollinger Bands before entering a long position. This could involve waiting for the RSI to move above 30 or for the price to break above the lower Bollinger Band. Once a signal is received, the entry price would be the next candlestick close, the stop loss would be placed below the recent swing low, and the target price would be based on the forecast and the overall trend. Based on the provided data, THETA network appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests this trend will continue. Support is located at 0.815, making this a potential entry point. A stop-loss order should be placed below this support level, around 0.80, to limit potential losses. The first target price could be set at the next resistance level, which is 0.882, based on the forecast data. The RSI indicates that THETA network is oversold, which could signal a potential bounce. However, the Bollinger Bands suggest a continuation of the downtrend as the price is trading near the lower band. Therefore, a more conservative approach is recommended, entering a long position only if the price holds above the support level of 0.815 and the RSI shows signs of a reversal. The portfolio should prioritize the strategy based on support and resistance, with a stop loss at 0.80 and a target price of 0.882. Based on the provided historical and forecast data, WorldCoin appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with the forecast indicating further downward movement in the coming week. The support level at $0.756 provides a potential buying opportunity. A long position could be initiated at $0.756 with a stop-loss order placed at $0.736 to limit potential losses. The target price could be set at $0.888, representing a potential upside of 17.4%. Additionally, the RSI indicator suggests that WorldCoin is oversold, with readings consistently below 30. This reinforces the potential for a price rebound. The Bollinger Bands also indicate a potential for a bounce, as the price is approaching the lower band. Combining these signals, a long position initiated at $0.756 with a stop loss at $0.736 and a target price of $0.888 presents a potentially profitable opportunity. Based on the provided historical and forecast data, Hooked Protocol appears to be in a downtrend. The price has been steadily declining over the past 2 weeks and the forecast suggests this trend will continue. The support level at $0.129 is likely to hold, but the resistance level at $0.154 is unlikely to be breached. Considering these factors, a short position could be profitable. A suitable entry price would be around $0.139, with a stop-loss order placed at $0.142 to limit potential losses. The target price could be set at $0.129, aiming for a profit of approximately 8%. This strategy utilizes the downward trend and the support level to maximize potential gains while minimizing risk. Based on the provided data, Artificial Superintelligence Alliance appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price dipping below the support level of $0.461 on several occasions. The forecast data also suggests a continuation of this downward trend for the next week. Considering these factors, a bearish position strategy is recommended. We can enter a short position at the current market price of $0.517 with a stop-loss order placed at $0.53, slightly above the resistance level, to limit potential losses. The target price for this trade could be $0.461, which represents the recent support level and a potential area of significant price consolidation. This strategy utilizes both the historical price trend and the support/resistance levels to identify a potentially profitable entry and exit point. Based on the provided historical and forecast data, Polkadot appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with the forecast indicating further downward movement. The support price of $3.87 acts as a crucial level to watch, as a break below this level could accelerate the downtrend. Therefore, a bearish strategy is recommended. A short position can be entered at the market price around $4.05, with a stop-loss order placed at $4.19 to limit potential losses. The target price is set at $3.87, aiming to capture the potential downside movement. Alternatively, a strategy utilizing the RSI indicator suggests waiting for a price bounce towards the overbought level of 80, then shorting Polkadot with a stop-loss at the entry price and a target price at the support level of 3.87. Based on the provided data, Filecoin appears to be in a downtrend. The historical price data shows a consistent decline, with the price closing below the previous day's close in several instances. The forecast data also suggests a downward trajectory for the coming week. Considering the support and resistance levels, the current price is hovering near the support level of $2.65. Therefore, a short position could be considered. An optimal entry price for a short position would be around $2.80, with a stop-loss order placed at $2.90 to limit potential losses. The target price could be set at $2.50, aiming to capitalize on the anticipated downtrend. This strategy is supported by the RSI indicator, which is currently below 40, indicating oversold conditions. Additionally, the price action is approaching the lower Bollinger Band, suggesting a potential price reversal. Based on the provided historical and forecast data for Conflux, the price shows a downward trend. The RSI consistently hovers below 50, indicating bearish sentiment. The price also falls below the 20-day moving average, further supporting the downtrend. Considering these factors, a short position is recommended. The entry price should be around $0.0831, the predicted price for March 15th. The stop-loss order should be placed at $0.086, above the recent swing high, to limit potential losses. The target price is set at $0.0731, the identified support level and the lowest point in the recent price history. This strategy utilizes the downtrend and RSI momentum to capitalize on potential price decline. Based on the provided data, Ethereum name service appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data projecting further downward movement. The RSI, while fluctuating, remains below 50, indicating bearish sentiment. The Bollinger Bands are contracting, suggesting a potential for a breakout in either direction. However, given the overall downtrend, a breakout below the lower Bollinger Band is more likely. Therefore, a short position is recommended. Enter a short position at the market price when the price breaks below the lower Bollinger Band, which is currently around 14.4. Set a stop-loss order at 16.4, the support level, to limit potential losses. The target price is set at 15.0, based on the forecast data and the continuation of the downtrend. This strategy utilizes the trend, RSI, and Bollinger Bands to identify a potentially profitable short opportunity. Based on the provided data, Avalanche appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price falling below the 20-day moving average. The forecast data also suggests continued downward pressure on the price. Therefore, a bearish strategy is recommended. A short position should be initiated at the entry price of 18.6, the first day's forecast price. The stop loss should be set at 19.0, the resistance level, and the target price should be 16.3, the support level. This strategy utilizes the support and resistance levels, as well as the downtrend identified in the historical data. Based on the provided data, Bitcoin appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price closing below the support level of $0.0226 on multiple occasions. The forecast data also suggests a continuation of this downtrend in the coming week. Therefore, a bearish strategy is recommended. A good entry point for a short position would be around $0.0243, the first forecast price. The stop loss should be placed above the recent high of $0.0248, at $0.025 to limit potential losses. The target price could be set at $0.0226, the support level, with a potential for further downside movement. The RSI indicator is currently hovering around 35, suggesting that the market is not oversold. However, if the price continues to decline and the RSI falls below 30, it could signal an oversold condition and potentially lead to a short-term bounce. The Bollinger Bands show that the price is trading below the middle band, indicating a bearish trend. The price is also approaching the lower band, suggesting a potential for further downside movement. Overall, the combination of the downtrend, RSI, and Bollinger Band signals suggests that a short position in Bitcoin could be profitable in the short term. Based on the provided data, PENDLE appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data suggesting this trend will continue. The RSI indicator is mostly below 50, further supporting the bearish sentiment. The price is currently hovering near the support level of $1.91. Therefore, a short position could be considered. A good entry point would be around $2.12, with a stop loss placed at $2.18 to limit potential losses. The target price could be set at $1.91, the identified support level, aiming for a potential profit of $0.21. This strategy leverages the downtrend and the potential for further price decline. Based on the provided data, a potential investment strategy for the sandbox focuses on a short-term bearish outlook. The historical price trend shows a decline over the past 2 weeks, with the price consistently trading below the 20-day moving average. The forecast data further reinforces this bearish sentiment, predicting a continued downward movement in the coming week. Therefore, a short position could be initiated with an entry price around 0.278, the predicted price for March 15th. A stop-loss order should be placed at 0.283, the resistance level, limiting potential losses. The target price could be set at 0.259, the strong support level, aiming for a potential profit of approximately 7%. This strategy utilizes both the price trend and technical indicators to identify potential entry and exit points. Based on the provided data, Decentraland appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend may continue. The support level at 0.271 acts as a temporary floor, but the resistance level at 0.273 consistently prevents upward momentum. Considering these factors, a short position could be considered. A suitable entry price would be around 0.273, near the resistance level. A stop-loss order should be placed at 0.278 to limit potential losses. The target price could be set at 0.254, aligning with the forecast lows and providing a reasonable profit margin. Based on the provided historical and forecast data for ENG coin, a potential investment strategy emerges. The price has been generally trending downwards, with the forecast suggesting continued weakness in the coming week. Support appears strong at 0.0851, while resistance sits at 0.0923. Given this, a bearish position could be considered. A suitable entry point would be around 0.0904, the price on March 14th. A stop-loss order should be placed at 0.0923, the resistance level, to limit potential losses. The initial target price could be set at 0.0851, the support level. This strategy leverages the downward trend and utilizes support and resistance levels for risk management. Based on the provided data, Uniswap appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data projecting further downward movement. The RSI indicator is consistently below 50, confirming the bearish sentiment. Support is holding at 5.87, which can be used to initiate a long position. We will enter a long position at 5.87 with a stop-loss order placed at 5.73, below the support level. The initial target price is 6.43, the resistance level. To manage risk and enhance potential returns, we will also employ RSI and Bollinger Band signals. If the RSI crosses above 30, indicating a potential reversal, we will consider raising the stop-loss to cost basis and raising the target price to 6.8. Conversely, if the price breaks below the lower Bollinger Band, we will exit the position to avoid further losses. This combined strategy aims to capitalize on the potential for a short-term rebound while mitigating downside risk. Based on the provided data, Chainlink appears to be in a downtrend. The historical price data shows a consistent decline over the 2 weeks, and the forecast data suggests this trend will continue. The support price of $12.7 provides a potential buying opportunity, but the RSI, hovering around 35, indicates the asset is not significantly oversold. A good entry price could be around $12.8. The stop-loss should be placed below the recent low of $12.7, at $12.6, to limit potential losses. The target price could be set at $13.9, the recent resistance level, aiming for a 9% gain. In addition to the trend analysis, the Bollinger Bands can provide further insight. The price has been consistently trading below the middle band, suggesting a bearish sentiment. However, a potential bounce could occur if the price finds support at the lower band. Combining this with the RSI strategy, a bullish signal could be generated if the RSI rises above 40 while the price bounces off the lower Bollinger Band. This would suggest a potential short-term reversal, prompting a buy order around $13.1 with a stop-loss at $12.9 and a target price of $13.9. Based on the provided data, Aave appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price dropping from $221 to $173. The forecast data for the next week further suggests a continuation of this downtrend, with prices predicted to fall below $160. Given this bearish outlook, a short position strategy is recommended. A suitable entry point for a short position would be at $170, which is slightly above the current price and the predicted low for the next week. The stop-loss order should be placed at $175 to limit potential losses. The target price for this trade could be $155, which represents a significant drop from the entry price and aligns with the predicted price movement. This strategy leverages the downtrend and the oversold RSI conditions to potentially generate profits. Based on the provided data, EOS appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests further price drops in the coming week. The RSI indicator is also below 50, indicating bearish sentiment. Considering these factors, a short position is recommended. A suitable entry price would be around 0.485, with a stop-loss order placed at 0.498 to limit potential losses. The target price could be set at 0.45, aiming for a profit of approximately 7%. This strategy utilizes the downtrend momentum and the oversold RSI level to capitalize on potential price declines. Based on the provided data, Tron appears to be in a slight downtrend. The price has been hovering around the support level of $0.194 and has dipped below the resistance level of $0.231. The forecast price suggests a continuation of this downtrend. The RSI indicates that Tron is not currently oversold or overbought, suggesting a neutral sentiment. A potential strategy could be to enter a short position at the next price bounce above $0.228 with a stop-loss placed at $0.231. The target price would be $0.219, aligning with the forecast price and the lower Bollinger Band. This strategy capitalizes on the potential continuation of the downtrend while managing risk with a tight stop loss. Based on the provided data, Suncoin appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price hovering around the support level of $0.016. The forecast data also suggests a continued downward movement in the coming week. Given this trend, a short position could be considered. A suitable entry price would be around $0.0162, the first forecast price. The stop-loss order should be placed above the recent high of $0.0165 at $0.0168 to limit potential losses. The target price could be set at $0.0155, which is a significant support level based on historical price action. The RSI indicator is currently at 34.7, indicating that the asset is not oversold. However, the price is approaching the oversold level of 20, suggesting a potential buying opportunity in the near future. The Bollinger Bands are constricting, indicating a period of consolidation. If the price breaks below the lower Bollinger Band, it could signal a further downward move. Therefore, the short position strategy based on the downtrend and support/resistance levels is the most efficient approach in this scenario.